Welcome to episode number 17 of the Under the Radar Real Estate Podcast. As always, I'm your host, Joshua Jean-Baptiste, broker here in the city of Toronto. So any of you who've been following the podcast, you know I took a little hiatus for a couple of months, went on vacation, other stuff happened. Anyway, we're back with episode number 17. So we're changing things up a little bit for the podcast, took the hiatus, rejigged things. So we are changing this to a live reaction to the Toronto Real Estate Board's stats. So they put out stats once a month, and previously we had it scripted out. I had notes, I kind of went over it, did my analysis, scrapping all that. It's my live reaction to the numbers. So I took a quick peek at the numbers. I mean, they kind of flood your social media feeds all the time. So I kind of have a read on what they are. However, I haven't taken a close look, and we're going to do that in real time. So let's jump right into it right away. So this is the homepage right here you see behind me of the Toronto Real Estate Board. This is what real estate salespeople and brokers see when we first log in. So I'm going to jump right into it. So the top story is the GTA housing market becoming more affordable. It's a funny line from the Toronto Real Estate Board, always trying to put lipstick on things. It's a funny headline. I mean, affordable, yeah, I mean, numbers come down a little bit, but I don't know if it's necessarily become affordable for most of those out there. That being said, those who watch this channel know there are some pockets of affordability in the city of Toronto, which we're going to get to later on in the podcast. So let's jump right into it. Let's look at the Market Watch report. This kind of goes through all of the numbers for last month, which was August 2024. Blurb right here. I'm not going to read the blurb on the podcast, but to sum it up, basically just kind of, again, trying to put lipstick on a situation that's a little tough. I mean, basically saying here that sales are down and listings are up, but let's get into the full report. So this is the Market Watch for August 2024. So right away you'll see, if you look over to the TREB MLS sales activity was down, right, from August of last year. And we know 2023 was already a pretty quiet year in real estate. So to have numbers down over August 2023 is a little rough. As an agent, I can tell you that, yeah, this August was really, really quiet. And then it's also reflected into the average price. I mean, August was quiet, wasn't a lot of transactions. Anything that did sell was likely a little cheaper than things were last year. So we saw prices down as well. So if we look down at the year-over-year summary, which is an easy, quick snapshot of the overall market. So sales, yeah, down 5% over last year. New listings are still trending upwards. Active listings, this is the big one, up 46% over last year. So we have almost 23,000 listings active right now in the GTA or on the Toronto MLS system, which is a lot of listings. Price we already touched on. But with all of these extra listings, that also means that the average days on market have skyrocketed. So, I mean, we're looking at average up 40% for the average listing days on market. Property days on market, which includes listings that have been maybe terminated and relisted. So properties that just have been on the market for a certain period of time, average is about 44 days. So it's taking people about 44 days to market and sell their properties, which is up 57% over last year. Big, big numbers. Now, not surprising though, when we look at the amount of active listings that are present. All right, so let's now just dive into the breakdown of the different property types, because while looking at overall averages is great, not every property is subject to the same conditions, right? So if we look, and we're going to look specifically at the 416. The numbers here show the 905 and then the overall average, but let's zero in on the 416. That's where I do most of my business, and that's what we try to focus on this channel. So when we look at the 416, which is the city of Toronto, the old city of Toronto, detached house prices are at almost 1.7 million. Semi-detached prices are just over 1.2. Townhouses, as you can see, at around 900 grand, and condos trending just under $700,000. So other than detached houses, these prices are down right across the board. Again, not a huge surprise with sales trending downwards, interest rates being what they are. This is not a surprise. Now, today is September 5th. We just had the Bank of Canada rate announcement yesterday. The governor of the Bank of Canada said it himself that in this environment now where they anticipate more rate cuts, it's likely going to hit the housing market and start to push prices back up. And looking at where pricing is right now and where sales are at, I tend to agree that now that we're in a cutting cycle and firmly in a rate cut cycle, especially now with the US also mentioning the same, as those mortgage rates start to come down, we are likely going to start seeing some upwards pressure on price, because now there's a clear signal from the policymakers that rates are coming down and it's going to give buyers more confidence to start entering the market or re-entering the market and start to create increased competition. Now, it's not going to happen overnight. We have a lot of inventory on the market. As said, we have just over, almost 23,000 listings. So it's going to take some time for that inventory to get absorbed, which we'll get to in just 1 second. But I wouldn't be surprised that by spring 2025, we are back to the days of bidding wars and increased competition in the market. So let's get to a couple of stats that I like to look at to really give us a read on the temperature of where the market's at, which is months of inventory and sales to listings ratio. So I'm going to scroll over to it right here. Here we got it. It's up here on the screen. So here's a breakdown of all the different neighborhoods in Toronto. We're not really going to look at pricing here. If you followed our podcast, we like to look at the HPI, the home price index, because I find it's a bit more of a smoothed out version of the stats. Some people don't like it. I personally like it. It gives me a better read on where pricing's at. And I think where, as a realtor, it gives me a better idea of where pricing's at in the moment in the neighborhoods rather than look at the average price, which I find is always a lagging indicator because it's from the previous month. Anyhow, enough of that. Let's jump into what I really wanted to talk about in this section right here, which is sales to new listings ratio, which is a trend, and the months of inventory. So this gives us an idea of how hot the market is, how competitive it is. So sales to new listings ratio is the amount of sales that happen versus the amount of listings that are on the market, right? So when we're looking at a hot market, for example, generally a sales to new listings ratio will be above 50%. That means over 50% of all the new listings that hit the market are selling. If we're below that 50% threshold, that means we are now in buyer's market territory where buyers have the upper hand, sellers do not. There's not a lot of competition for whatever's on the market, and only sub 50% of whatever's getting listed is selling. And if we look at here, the overall average in the city of Toronto, only 37% of the new listings that hit the market are selling. And then when we dive into some neighborhoods, when we look at the some of the neighborhoods of the city like CO8, zoom into it right here. So CO8, it's a condo-heavy neighborhood. So we're looking at a sales to new listings ratio of just 27%. So only 27% of the new listings that hit the market are getting sold. If we look at C01, which is another condo-heavy neighborhood in downtown Toronto, sales to new listings ratio is only 29%. And that kind of goes for all of the more central neighborhoods in the city of Toronto where there's a lot of condo product, because condos, as you've probably seen in the media, I just checked the other day, we're sitting at about 6,000 condos currently listed on the MLS. There's a lot of inventory. So when a new listing hits the market, it's not necessarily flying off the shelf. So less than 30% of those new listings are getting sold. When we zoom back out and look at the overall picture in the rest of the neighborhoods in Toronto, so when we look at Toronto West, we're sitting at an average of about 40% sales to new listings ratio. And then in the East, which is a bit of a tighter market, we're sitting at about 45%. Now, if we kind of zoom in even a little bit further on some neighborhoods, like again in the East End, the East End is a bit more in a scenario where they're in a balanced market. You'll see there's a lot of neighborhoods in the East End. If I zoom in right here, yeah, a lot of neighborhoods there are sitting at around 50%. So it's a fairly balanced market. So it's not necessarily the buyers or sellers have upper hand. So which means if you look at a property to property basis, there's a lot of properties in the East End that do have competition, that do have multiple bids, bidding wars, so on and so forth. So the East End of Toronto is not as well supplied as some of the other neighborhoods, clearly, and there is some increased competition in those neighborhoods. Some of that is also just due to pricing. If you look at the average price in the East End, if we look at the East End as a whole, they're sitting at about $940,000 as an average, and there's not as much condo product. I mean, if you were to compare it to Central, Central's only at 740 for, or sorry, that's the median price. The average price, sorry, for the East End is just under $1 million at 968, and the average price in the Toronto Central is at 1.1. So clearly, you are below the overall average price in the East End, which under $1 million is actually where most of the buyers are, right? If you look at the largest cohort of buyers, is in that $700,000 to $1 million range. So doesn't surprise me there's a lot of competition in the East End. Same thing goes for the West End. I mean, the West End, it's not as white hot and competitive as the East End. But again, if you look at the average price there, $965,000, below the overall average in Central Toronto. So there is some competition there. And we look at certain neighborhoods in the West End, especially some of the under the radar neighborhoods. We are seeing a lot of these neighborhoods are trending towards that balanced market at around 50%. So it clearly shows that in the pockets of affordability in Toronto, there's still competition and things are still moving and moving at a fairly brisk pace compared to the overall picture in the rest of the city. And really, it's the condo market that's really pulling all of these numbers down. When we look at months of inventory, which is another indicator of how well supplied a market is, months of inventory is a stat that where if you were to not have another listing hit the market, how long would it take for the market to sell off all of the inventory? So the overall average in the city of Toronto is at a 3.7, so it would take almost 4 months to sell off all of the inventory in the city of Toronto. To give an idea of like when the market was hot, that was well below 2 in most cases. So with under 2 months, sometimes it'd be half a month that they would project that all the inventory would be sold based on sales activity. When we look at the condo heavy neighborhoods, we're seeing numbers upwards of 7, 5 months, 6 months of inventory. So again, condos are well supplied. When we look at neighborhoods that don't have a lot of condos, again, we're looking towards neighborhoods. One of the under the radar neighborhoods in Toronto, W03, 2.7 months of inventory, so a little bit tighter. If we were to look at some of the neighborhoods in the East End, we're seeing some neighborhoods below 2 months of inventory, right? So E02, E03. So these are some of the neighborhoods kind of further east portion of the city of Toronto. So we're looking kind of like pockets of Leslieville, the beach, up into like Little India, places like that. We're seeing sub 2 in some of these places for months of inventory. So not a lot of supply, which again points to my earlier point that there is increased competition in some of these pockets of the city. So that gives us a kind of a quick read on where things are at overall in the city of Toronto, where the pockets of competition are, where prices are likely to rebound a little bit quicker. So in these pockets of increased competition, with rates coming down, we're very likely to see these neighborhoods kind of start to push up a little bit quicker than some other pockets of the city. So anyone who is looking now in the East End to purchase real estate, I mean, the time is yesterday, but I'd say the time is now to try to get into this pocket before all of the buyers really start rushing in. There's already competition there. Things are already moving at a brisk pace. As mortgage rates come down, that's only going to start pouring more gasoline onto that fire, and we are going to see things really start to move. There's some construction going on outside my house, which is what that noise was. Now, a lot of you are here for the under the radar takes and the under the radar neighborhood. So as I mentioned earlier on in the podcast, and I'll mention again right now, we focus in on 3 neighborhoods in the city of Toronto on this channel. So that is Eglinton West, Weston, and St. Clair West, which is roughly the old city of York. So pre-amalgamation, the city of York was its own independent municipality. And that's the under the radar area that we focus on this channel. And again, I'll just give you quick reasons, because this neighborhood we feel is very undervalued. It's getting a new subway line that should hopefully open at some point in the near future, which is the Crosstown LRT. But there's also a lot of infrastructure that is currently there or coming to the neighborhood, which should affect values in this pocket. So those 3 neighborhoods, if we were to look at it from a Toronto Real Estate Board, they classify them as W03, W04, and C03. So if we look just specifically at the overall composite benchmark price, W03, we're looking at an average of about $971,000 for the average property in this pocket, which is, these numbers are down about 6% over last year, and about $100,000 below the overall average in the city of Toronto. When we look at W04 at $904,000, those numbers are also down about 7% over last year, and about $155,000 below the overall average of the city of Toronto. And then when we look at CO3, some of you may say, why is that an under the radar neighborhood? Well, hold on, we'll pump the brakes for 1 second. C03, average of 1.6 million, and also numbers down. I mean, numbers down quite right across the board in the city of Toronto when we look at the composite index. $550,000 over the overall average in the city of Toronto. However, C03 is unique. There's not a lot of condos, townhouses, or even semi-detached houses in C03. They exist. There's just not a lot. The predominant house type in C03 are detached houses. So for this particular one, if we look at the overall average for detached houses specifically, this overall average in the city of Toronto is 1.64. When we look down at CO3, the average price for detached house is $2 million, just over $2 million. However, this neighborhood is under the radar from an upscale perspective. I've called it before on this channel multiple times, the most underrated luxury neighborhood in not only in Toronto, but probably in Canada. Because if we look at the neighborhoods that surround it, so C02 and C04, and C02, the average price of a detached house is $2.9 million. When we look at C04, the average price is $2.68 million. So to buy a detached house in C03, you're still getting that Forest Hill vibe in a lot of the pockets of C03, but you're not paying Forest Hill, Lawrence Park, Wychwood pricing. So you're getting, on average, at least about almost a $700,000 savings to buy a detached house in C03 versus the neighboring neighborhoods. Clearly easy to see with the under the radar neighborhoods, they are still averaging below the overall average in the city of Toronto, and then C03 is still averaging below some of its neighboring luxury neighborhoods. We're still a big believer in these under-the-radar neighborhoods having some of the most potential in the city of Toronto. And why is that? Those of you who watch the channel, you already know, but those of you who are new, welcome. And the reasons are that the demographics of what makes up the old city of York really is reminiscent of Brooklyn in the city of New York. It has a very similar vibe from a demographic standpoint, from an income standpoint, and even it's where it's situated within the city. It's very well connected to pretty much almost everything you'd want to do or anywhere you'd want to go in the GTA. So you have major highways that cut through this pocket. So you're very close to the 401, you have the Allen Road. From a transit perspective, you have the new Crosstown LRT that's going to cut right through the neighborhood. But you also have things like the Up Express. So you're really well connected to Pearson Airport and downtown Toronto. You also have multiple GO lines that cut through the neighborhood. So from a transit and access perspective, there's not another neighborhood, in the GTA that's better connected than the old city of York. So because of all of this, and not to mention all of the cool neighborhoods that are popping up within here, like Oakwood Village, even St. Clair West, and you'll be surprised on how quickly Eglinton will change over the next few years. With all of this attention and all of the changes that are happening in this pocket, I'm a true believer that this is the Brooklyn of Toronto, and within a decade, we are going to see this neighborhood absolutely explode with growth. There's already growth now, but there's going to be more growth. And what with more growth brings generally higher price points. So if you're looking to get in before that happens and get into something that's affordable, also hit us up. I have a running search and list that I have people subscribe to for homes that sell below $1 million. And a lot of the homes in this pocket you can find for below $800,000, for example. Get onto that list. We can start emailing you that stuff now, and you can get into some of these homes that right now, yes, are trading for below $1 million, below $800,000, but within 5, 7, 10 years, it's going to be really tough to find anything, in my opinion, below 1.2, 1.3, even $1.5 million. So time is now to get into this pocket. Lastly, just want to touch on a couple of kind of like under the radar things that the media might not touch on, but that kind of pop out to me as I'm kind of reviewing the numbers again in real time. I haven't really looked at any of this. One thing that pops out to me right away when I look at kind of the overall sales statistics from last year compared to this year. So if we look at the overall sales last year in the Toronto Real Estate Board, we saw just under 66,000 total sales. Currently, we're sitting at about 47,000 sales with the fall market approaching. It's going to be interesting to see where these numbers fall at the end of the year. With some of the rate drops, we might see some increased activity. But, I don't know if we're necessarily going to see an explosion of activity this year, where I think we're probably going to end the year in and around probably the same number at about 66,000. Maybe we'll hit 70,000 with talks of further rate cuts. But overall, it's still going to be a fairly quiet year. And then when we compare that to like some of the previous years we've had, if we look at 2022, which was a fairly quiet year, that we hit 75,000 sales. 2021, we had 121,000 sales in Toronto. And prior years, we usually sat at around 85,000 sales. So we're still well below, like 20,000 plus below the overall average that we've seen over the last decade in Toronto, decade plus in Toronto. So I say I think for the rest of this year, we have a window of opportunity. And after this video gets posted, there's going to be another subsequent video where I talk about the people who are deciding to wait or the people who want to jump in now. And after doing a little bit of analysis into the market, you'd be kind of surprised to know where my opinion lands on whether you should wait or whether you should jump in now. And spoiler alert, once you get to the end of the video, you'll find out that it's probably the best time to jump into the market right now. I mean, there's a lot of signs that are pointing to the fact that we're, from a pricing, at least from a pricing standpoint, we might be at the bottom, or if we're not at the bottom in terms of pricing, we're very close to the bottom for pricing here in the city of Toronto or the overall GTA. So with all of this inventory, with rate cuts happening right now and further on the horizon, it's really looking like there is a window of opportunity for anyone who's looking to purchase real estate to get into the market right now. And not to say that waiting isn't in the cards for a lot of people. I mean, real estate's cyclical. It's not like right now is going to be the only bottom we ever see. I mean, as you look at like the overall average and trends of pricing in real estate, regardless of where you are, things always have ebbs and flows and go up and down. But at least for this next decade or this next kind of era in real estate that we're heading into kind of post-pandemic, I think we've seen the bottom. And if you're waiting, you might be waiting for a decade plus for there to be another opportunity to get back into the market. I mean, we are still in a housing crisis. Our last video, we kind of talked about the housing crisis and how it's not necessarily a supply. I mean, supply is an issue, but our housing crisis is very complex, where most of it just comes down to affordability and types of housing. We do have a lot of housing. I mean, there's a lot of one-bedroom condos that are currently sitting on the market that no one wants to buy, but not everyone can live in a one-bedroom condo. So we are still in a housing crisis, whether it be affordability or supply or type of supply. So if you are, again, looking to get into the market, and I know even for a lot of people, $800,000 to $1 million is a big number, but for those of you who have budgets in that range, there's an opportunity right now where you can get a 2 to 3 bedroom starter home in some of these under the radar neighborhoods that we talk about on this channel and get into the market before we get back to a time where, I mean, even just 2-3 years ago, when someone would come to me and they'd say, hey, I have a budget of $800,000, I want to buy a house, I would tell them, I mean, maybe we can look in Detroit, right? There was just really nothing available here in the city of Toronto, but those numbers have come down and there is availability now in the city of Toronto at that price point for a house or a large family size condo. So that about wraps it up for my live reaction to the Toronto Real Estate Board stats for August 2024. Drop comments down below how you thought about the live reaction, what you think about the numbers, where you think about where the market's heading into the fall and into 2025. We'll do another update. I have some more updates on some of the under the radar neighborhoods. I mean, the videos that are on this channel are from last year, and there's some updates and new things that we want to target to kind of give you guys some new neighborhood tours. So of Eglinton West, Weston, and St. Clair West. So those are in the pipeline, hopefully drop within the next month or so. And then keep watching the channel. A lot of kind of smaller videos, 6 to 7 minute videos that we're putting up now. They're easier to digest, easier to watch when you're just on your phone or on your iPad. So that's it. Thanks for watching, especially for those of you who got all the way to the end here and listening to me ramble on. That's it. So as always, thanks for watching. Peace out.